flashing for you just in a bit, and that is something that we were expecting to come by in this particular segment as well. In terms of what we were expecting for Pole, so the revenue was expected to increase by 16% to come in at 33,740 crore rupees. EBITDA was expected to be up 40% to come in at 3,980 crore rupees. And we have the margin picture. This time around expected to improve by 200 basis points to come in at 11.8% versus 9.8% that the company had reported earlier. And profits were expected to come in higher by 30% to come in at 3,050 crore rupees. So it has just hit the exchanges, and we'll be getting the profit number in a bit. But volume growth in terms of growth was expected to be around 8% on a YY basis. And if we look at the UVs, that is this particular segment that would have driven the growth, there it is. We have the net profit which is coming at 3,130 crore rupees, which compares with a Pole of 3,050 crore rupees. So it's a wee bit higher than around 80 crore rupees higher than what the Pole was suggesting. And we'll get in Sonia as well in just a bit to tell us what these numbers are looking like. For now, revenues as well, mild miss there actually of around 400 crore rupees, but profits are higher by 80 crore rupees if we compare it with the Pole. In terms of margins, it was expected to be a number higher by 200 basis points to come in at 11.8%. But Sonia, tell us, these are just the basic numbers, of course. What are they looking like?
So, you know, on the top line, it's not bad. It's largely in line with what the street was estimating. I think the beat has come on the profitability side. And also, even if you look at the margin performance, right, it's largely in line with estimates. The Pole was around 3980 crores. It's come in at 3908 crores. So what's happened this time around is that, last quarter, the margins actually were expected to improve because of a reduction in raw material prices. But for Q4, that is when the big, margin lever could perhaps come to an end. Because in Q4, what has happened is prices of raw materials have gone up. So the important bit to note is, will they be able to sustain these 11.5% margins? That's important. But largely, if you'd have to say, it's a beat on the profitability. 33% growth on the bottom line is what we've seen for Maruti, coming in at 3130 crores. Margins have come in at 11.7%. The Pole was 11.8%. If you look at it on a year-on-year basis, margins have improved quite a bit. So it is almost a 200 basis points improvement that we've seen year on year. Same time last year, their margins were 9.8%, and this time it's come in at 11.7%. So a big margin up move. On a sequential basis, there was a little bit of pressure. As I said, now the raw material tailwind has come to an end because raw material prices have gone up a little bit. But Maruti has also passed on a couple of those, raw material prices. So that effect will take place in the subsequent quarters. But we have Ashwin Patil who joins in. Ashwin, a couple of things here, right? One is the numbers are not bad. They are largely in line with estimates. It's a beat on the profitability for Maruti. And Maruti has actually underperformed the market overall, if you look at it in terms of a stock price. So what would your reaction be to the numbers?
See, more or less the numbers have been in line with our expectations. On margin front, we were expecting slight deceleration because of the product mix, and but the margins have come in quite in line with what the street was expecting. But slightly, going forward, I believe that the concern starts from Q4 when the raw material prices have started increasing, and the tailwinds of Q3, I think they will be almost gone in Q4. So the numbers or the full year numbers need to be seen. And yes, the underperformance of the stock has been there because it is almost fully valued. The valuations are quite pricey at at close to about 28-30x on FY26. So I think that definitely the market has priced in, and accordingly the stock has been behaving in a subdued kind of a neutral zone. So I think going forward also, today the stock has gone up on the results by about a couple of percent. But going forward, I think the stock will again, see a moderation over these levels. So nothing great as such from the numbers, but yes, they were slightly better than the expectations of the street.
Okay, so nothing great in the numbers, no positive or negative surprise, largely in line with estimates. Revenue growth has come in at 15%. I think the problem is, the small car segment, right? That has been under pressure, the entry-level models. So entry-level models, if you look at it, the decline in volumes has been 48%. Of course, it's compensated by the big growth that we've seen in the SUV segment. UV growth was 60% this time around. But Ashwin, I wanted your thoughts on that. In the meantime, we also have Himanshu Singh, who's joining in. He's a research analyst at Prabhudas Lilladher. Himanshu, a decent set of numbers, no positive or negative surprise, but the stock is reacting well. It's up 1.5%. Would you change your EPS or earnings estimates based on what you've seen in this quarter's numbers?
No, I think the numbers are largely in line on the margin side and also on the revenue side. So the other income was slightly higher than what was expected, and I think that is what has driven the beat on the PAT. So overall, I don't think there will be much change on the numbers in the EPS for the full year and next 2 years also. We'll wait for the commentary and we'll see and if the management gives any guidance on the volume side. So yeah, I'll wait for that.
One point that our previous guest was making, and I agree completely, is that, from here on, there are very few tailwinds for the company, right? Raw material prices are going up. So will they be able to hold on to this 11.5% margins is the question. Himanshu, what do you think? Will the company be able to pass on enough price hikes to the consumer? Because the entry-level model segment has been under pressure, and rural demand, as we have seen for the last 4 to 5 quarters, has not really picked up in a big way. So do you think now is when the margin pressure will start to kick in?
No, I don't think margin pressure should come in from these levels. Because the company has recently taken a price hike of close to 0.5%, I think, and the increase in commodity prices is also not very substantial. So I don't think there will be any margin pressures going ahead from these levels, at least on my view.
Okay. All right, so no margin pressures from these levels. Got it. Ashwin, the management conference call will be at 3:30 today, so we'll get to know more about, their volume guidance, etc. But they have spoken about single-digit growth in the overall industry, purely because the entry-level segment has not gone up. Tell me, what are your expectations from the conference call? And at this price, 10,000 rupees on the stock price, is the risk-reward still favorable for investors?
See, during the conference call, definitely we are expecting some kind of volume guidance going forward in FY25 because, FY24 also the growth has been stable, we would say. But going forward, are there any new model launches which would trigger the volume growth going forward? That will be our, a query. And secondly, the outlook on the entry level, of course, the SUVs are going strong, but the entry level is pulling down them on the volume front. So that is, we need to seek some outlook on that. And secondly, the impact of the raw material prices, which may be going up further going forward. So the impact on the margins, whether they will be stable or not going forward, or there will be an increase or decrease, we need to seek that. And secondly, at these price levels, I think the stock is almost fairly priced. I mean, hardly 5% kind of increase we may see from these levels. So, we are maintaining a neutral stance on the stock.
All right. Thank you, Ashwin, Himanshu and Sonia for joining us and taking us through Maruti's numbers. The stock has come off from the highs, but the numbers absolutely in line with estimates. We'll slip into a break now. On the other side, Vijay Banka, the MD of Dwarikesh Sugar Industries, will be with us to discuss their quarterly earnings. Stay tuned.